He's making his investments talk. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business standard. He's making plans for an early retirement. Business standard. She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard. He's making plans for an early retirement. Business standard. She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard. He's making plans for an early retirement. Business standard. She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard. He's making plans for an early retirement. Business standard. She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard. He's making plans for an early retirement. Business standard. She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard. He's making plans for an early retirement. Business standard. She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard. He's making plans for an early retirement. Business standard. She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard. He's making plans for an early retirement. Business standard. She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard. He's making plans for an early retirement. Business standard. She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard. He's making plans for an early retirement. Business standard. She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard. He's making plans for an early retirement. Business standard. She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard. He's making his investments talk. Business standard. He's making plans for an early retirement. Business standard. She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard. He's making plans for an early retirement. Business standard. She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard. He's making plans for an early retirement. Business standard. She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard. He's making plans for an early retirement. Business standard. She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard. He's making plans for an early retirement. Business standard. She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard. He's making plans for an early retirement. Business standard. She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard.
Good afternoon, everyone. We have been in a new world the last few months, and we're trying to understand it better with our virtual financial conclave, Unlock BFSI 2.0. Today is the second day of this series with leaders in the Indian fintech space. A warm welcome to those who had joined us for the first session with economists a couple of days ago, and to those who've come in for the first time. 4 more days and 7 more sessions lined up till 27th August. Do take a look at them at bs-bfsi.com. We would be happy to take a few questions for the panelists after the initial discussion. Please send them in the questions box on the website or as comments on Facebook if you're watching the Facebook Live. For social media conversations, use the hashtag BS_BFSI. I would now request Mr. Tamal Bandyopadhyay, our consulting editor, to start the discussion.
Hello, good evening, and very warm welcome to the second day of Business Standards, this series of conferences on the New World 2.0, Unlock BFSI 2.0. Today is the second day, and we are with the finest minds from the world of fintech and tech fins. And we'll explore, a predictable topic, nothing new, but the context makes it very, very interesting. All roads lead to the digital world. We have seen a few years back, 2016, December, India embraced demonetization. That gave a big booster to digital finance. But what demonetization could not do, it just gave a first booster dose, but the volume was sagging. And now the corona lockdown has made the digital world is a sort of, it's the new world for all of us, for everything, not only finance. And the difference between you six who represent one industry today and the others who will be doing in future is different. The difference is for all other industries, the new world, this COVID-19 is, many of them look at the challenges, only challenges, the aviation, tourism, other areas. Many of them look at the challenges and opportunities. Both are there. BFSI, of course, is one of them. And very few of them look at only the opportunities. And your world is this. I think very few challenges, only the opportunities. And I'm sure all of you who represent fintechs and tech fins are grabbing these opportunities with both hands. And what are the opportunities? I was going through a ASSOCHAM PricewaterhouseCoopers India study, which had projected the India digital payments would double to 135 billion plus in 2023, which was roughly 64.8 billion in 2019. It is many of them say that India is becoming a digital economy with 700 million smartphones and 800 million internet users, again by 2023. So it's a 3-year down the line. That's the kind of projection. So it's a low touch or no touch payment system. That's the kind of thing. And I'll take only 1 more minute how India is different from the rest of the world. India is the biggest market when it comes to this, your world, but the non-conventional one. When it comes to digitalization through innovations, it's only next to China. You are far, far ahead Indian payment system, ahead of the other developed markets, including US. Even China, you see, they whenever they call the digital word, they call this BAT, BAT, Baidu, Alibaba, Tencent. That's the Chinese word. In US, if you talk about people, they're all acronyms. That's interesting, but people should know what is the difference. They call it FANG, FAFAANG. It's a combination of Facebook, Amazon, Apple, Amazon, Netflix, Google. But in India, thanks to our QR code and interoperability of system, UPI, it's a completely smoothless. There's no BAT, no FANG. It's just only one interoperable system. And that I'm sure all of you agree. I'm not a techie. My knowledge is thanks to Google Auntie or Mr. Google, whatever you say. But India, we don't talk about BAT or FANG. India is just like one nation, one platform, thanks to the interoperability of the system that we have. So that's the India story, which is fascinating, which is growing. And as I said, for you six, half a dozen, they're all only opportunities, very few challenges. So this round, all of you, I'll ask, and with popular demand, the rest of you said that Ram should start. Ram represents Visa. I'm not wasting my time to introducing any of them because all of them are known to you. So let's save that time for discussion. Ram, you will start first. Tell us how are you embracing this new digital world?
Thank you, Kamal. And I don't know in the COVID context if bats with fangs are very appropriate. But be that as it may. I'd love to see my fellow panelists say that there are no challenges and only opportunities, but I guess it's glass half full. As you rightly sort of pointed out, demonetization was the trigger for the adoption of digitization in the country. And we're really excited about the second wave of digitization, both from a consumer perspective and from a seller or merchant perspective. I think what is interesting for me post-COVID, and we can all have a sort of robust debate and discussion on the key points, but 2 or 3 big things sort of stand out, right? One is the whole MSME digitization, right? We all talk, and you alluded to UPI and whether it's debit or credit or whatever it is in terms of the buyer side digitization, but seller side digitization, MSMEs, and the number of innovative payment solutions to enable MSMEs to go online is remarkable. I mean, certainly Sajid and Samir sitting here, and we have Manish sort of sitting here, each of whom is doing yeoman service in that field. But so that is one thing that immediately strikes me, right? And within that, we can go into O2O and how the lines between online and offline are blurring and so on and so forth. The second big trend, I would say, is the heterogeneity of payments. And I think India's too larger country. It's urban, it's semi-urban, it's rural, to sort of compartmentalize it into one box. And the sheer number of payment solutions which are proliferating are sort of next to none. Of course, this creates, a NASCAR car sticker problem. At some point, we'll have to worry about whether those things are interoperable, they speak to each other and so on. So that's the second big trend I'd point out. The third big trend is the very active role of the government of India through MeitY, even through Mohan, other sort of institutions in the government, and the RBI. Let me just tell you 3 things which are super interesting from an RBI perspective, and then I can sort of end with one last point. One, the Payment Infrastructure Development Fund, which of course came in its first avatar as the Acceptance Development Fund in 2016. But now the RBI is saying they'll put skin in the game. And it's a 500 crore fund of which the RBI is going to fund 50% approximately. And that's remarkable, right? Second, the RBI has come out with a draft framework. And Tamal, you know that widely the final framework is expected in the next month or so, I would imagine, of a new umbrella entity or an NUE for payments. And what are they really saying? Despite NPCI doing some stellar work, and Dilip and the team have done some remarkable work at NPCI, they're saying India is too large. We're talking about 1.5 billion transactions a month now. They're talking about what happens if it goes to 1.5 billion transactions a day. what is your second point of failure, what is your sort of continuity, and so on. So the new umbrella payments entity, both from a financial inclusion perspective on the one side of the spectrum, to corporate and cross-border on the other side of the spectrum, and everything in between, is expected to come up with some sort of innovation around it, and everybody is holding their breath to see sort of what happens there. And the third thing is what is happening in terms of regulatory sandboxes, right? Of late, for example, the last one I can remember is the RBI come out with up to 200 rupees. Can we think about offline payments? Because telecom connectivity is not there in many parts of the country. And how do you sort of enable that from taking a balance, put it into a wallet? Can that wallet be QR? Can it be sort of a chip that resides on a card or whatever it is? Super interesting, right? And they'll come up with results for innovation. So long story short, I mean, it has its fair share of pitfalls. Any sector where the government is actively interested in is always an interesting sector. So I'd not go so far as to say that there are only sort of opportunities and not challenges. But on balance, if you were to ask the participants on this panel, I think each of us is tremendously excited by the decadal opportunity for digitization. At the end of the day, there's only 10 to 15% of consumer personal expenditure which is digitized in the country, which means there's 85% more of work to do. And it takes a village to have an effort like this.
Thanks, Ram. So let me rephrase it. Let me put it this way. Yes, it's more opportunities than challenges. Okay. So, let's hear Manish, M-Swipe, your preliminary comments, observation about the new world.
Clearly more opportunities than challenge. So I know that. However, challenges exist, very real. First, let me start by what we've seen, over the past 4 odd months. As you may be aware, M-Swipe has largely been a business that's been focused around enabling SMEs in the country to accept payments. Largely, payments for SMEs always meant offline. For the first time, we are starting to see massive convergence where these small businesses are starting to think of digital. How do I go online? These requests are more from tier 2, tier 3 cities than tier 1 cities. So that I think is just a fantastic opportunity because as these businesses will think that going online and getting digitized is important, the pace of change will just accelerate. That said, there are, while, I think the payment industries worked together to solve the core problem of payments, that is essentially transferring money from point A to point B. That I think is largely solved. And that is super simple and is painless. But some of the things that, and these are challenges, right? I mean, how do you onboard customers? What do we do about KYC? How do we ensure that the participants who we onboard, especially in the digital world where there is no physical visit, you're not, largely, interactions are limited. How do we ensure that the person that registers is actually, or the business that registers on your platform is actually the business that they say they are. So there are challenges, and these are some of the real challenges that I think still need to be solved. I'm sure solutions will be found, but yeah, that's some.
Okay, that's the preliminary remarks. Some of the issues that you are raising, we'll get into the micro detail in the next round, and of course there'll be questions from the audience, which has already started pouring in, I would say. So let's ask Nikhil. You are a very different. You are different from others because you are primarily in the equity space, trading space, and I'm not getting into all those micro details. We'll come to that later when the specific questions come. But in somehow I'm not. I think I'm not exaggerating if I say that you have changed the entire equity culture in India, and particularly which is evident during the COVID time. So give us a sense. I'm not asking you the questions where market is ahead of economy and all. That's a separate issue altogether. But purely from the platformification, that what you have done, and the response what you are getting, and the opportunities and challenges in this new world.
Sure, Tamal. So I would not say we are on the forefront of digitalization, or we are not in the same business as the other people on this panel, wherein we are more beneficiaries of what has happened versus people who are making it happen. As an online-only brokerage from when we have begun, each of these instances, beginning from demonetization, has gone a long way towards bringing a considerable amount of the investing community in India online. I think the offline model has completely gone out of the way, and more and more people we see are now moving from using web platforms to mobile platforms. I would say as much as 76% of our client base now uses their mobile phone to transact, track their positions, whatever they would do on offline through the relationship manager maybe 5 or 10 years ago. So I would call us a beneficiary of all that has happened. And I think the trend is great for the broking industry. Broking and access to capital markets in India is still extremely underpenetrated. We only have about 5% of our country which has either direct or indirect access to the capital markets. This number in the West, say in America, is as high as over 90%. With an interest rate cycle which is going down as rapidly as we have seen it in India, and a plateauing real estate sector in a way, a lot more capital needs to come into the financial ecosystem. And I think digitization will go a long way towards aiding that. So with that, I will come back and intersect at different points when something more relative to my industry comes about.
Sure. Okay. Thanks, Nikhil. You spoke about the more participants for the equity market in US. If I'm not mistaken, you are sort of you are sort of Robinhood version in India, right? Because US have you have the US counterpart of Robinhood. What Robinhood is doing in US, drawing more and more retail customers on the trading table. That's what you are doing in India. Yeah, we'll get into the nitty-gritty later. Who is left out? Let's talk to Rajesh, Infrasoft. You are a sort of pure play sector agnostic. You will just offer your platform. So, and you are, we'll get into all the details, but you are expanding your business, not only India, even beyond. So give us a sense in the COVID time, it's a big opportunity for you, or like others say, there are challenges too, but more opportunities than challenges.
Yes. So we are in the business, as Infrasoft Tech, we are in the business of providing solutions to banks. And in these areas, it's typically in the digital payment space, in the regulatory technology space, and in core banking and digital lending. So like Manish mentioned on the panel about the challenges in the back end, those are some of the challenges that we look to address for banks. What we've been looking at is, providing solutions where you don't have a webinar syndrome or a Zoom or Teams syndrome in that view. And I'll just explain what that is. So we are sitting here in suits, and you could very well be wearing pajamas below, and not really, people would not be aware of it. And that's typically how the digital world may get into if investments in the back end is not done. So you could have client onboarding, digital payments, etc. as the front office, but the back office is where banks also need to focus, which is in the areas of regulatory technologies like anti-money laundering checks, anti-fraud, and various other areas where you need to have a very open product basket for customers who want to demand more and more on digital channels. And that's something that really is of importance, which I think when done addresses most of those challenges with regards to what the opportunities of digital expansion brings. The other part that I would like to probably contribute during this time is also about the challenge of digital literacy, because one of the key areas that is a challenge is the digital literacy of both customers and of the various stakeholders. And as we expand into new digital channels, be it conversational UI or areas of, let's say, in future 5G and IoT, then all the stakeholders need to be aware of how to manage operations in the new realm of things.
Okay. Yeah, Yeah, you spoke about wearing a suit and below the pajama, not the actual clothes. So yeah, one of us, Sajid was there, no? He was a little embarrassing. He is wearing a t-shirt and odd man out. Later, of course, he found Manish also wearing not exactly a t-shirt, but similar informal clothes. So you techies, you don't need, as long as you're wearing something, that's what you said. I don't think we would have allowed you pajama, but anyway, we are not seeing the low part. So Sajid, it's your turn. No embarrassment with a half-sleeve t-shirt. We have a collar. So even the certain clubs in India, they don't allow but t-shirt, but with a collar it's allowed. So in this techie club, you are allowed to enter. We allowed you to enter an entry. So you tell us your take, because Google Pay is a very, very critical player in the entire on this stuff, and we will get into the details part, the challenges for you later. But let's open up the discussion. What do you see?
Well, thank you, by the way, Tamal, for letting me into this club. And it's a big honor that you refer to me as a techie. I wish I was, but I'm like not an engineer or anything. I just work on the business side of things, and very much a student of the industry, if you will. Unlike a lot of the people here who've spent many years in this industry. I would say this. Look, crises tend to be very fertile breeding grounds, right? And I hope you can hear me clearly.
Yes.
Crises tend to be very fertile breeding grounds, and that's what we're seeing right now. The acceleration of a lot of the trends that Ram has spoken about, that others have referred to, has really happened as a result of this pandemic, right, that we're facing. And it has driven behaviors. I think the fundamental point I want to make here is that a lot of the actions that we refer to, they have been around, right? I mean, people pay bills, people buy things, people send money, but they've been around. None of that is new. It's the behavior, as in how you actually do this, that has kind of accelerated, 5-10 years. So in kind of 5 months, we've seen 5 to 10 years worth of progress happen very, very quickly. And I think it's a tribute to sort of the ecosystem, the players, the government, and indeed what NPCI have built, that it's scaled as much as it as say UPI has, and of course all the work that even cards and etc. have done. I mean, there's no country in the world today where cards growing as fast as like India is. So, these are probably looking to Ram to keep working his magic, all the time. So all I'd say is that, there's been an acceleration of a profound nature. I do think that this shift is secular in nature. I don't think this is a bump, and that there's a lot of work that we all have to collectively do to kind of provide this sort of services and to be able to do it reliably and in a trustworthy manner. But that I think all of us are down that path in right earnest.
Okay, thanks. Sajid, you are saying the 5th month we covered actually the road which would have taken up 5 years in 5 months that you have done.
That's right. That's kind of, it's more a catchphrase. I have no means of proving that.
Okay. That's amazing. But you are not a techie and should not feel embarrassed about it. I can't even pronounce technology. But I think all of us believe in that. You can own a car. To own a car, you don't need to know how to drive a car. As long as you can sit on the back seat and get the right driver, so you can own a car. So nothing to be embarrassed about it. So it's left out. I think Samir, we have not spoken, right? PhonePe, you're the last one in that final first round. Yeah, Samir.
Hi. I think will echo a lot of the thoughts that have already been shared here. I think, as Sajid mentioned, I think it's been very fertile ground for innovation. A lot of very interesting things happening across not just payments, but the broader fintech sector. I think 3 areas where I would specifically say COVID's been very helpful. One, customer word of mouth adoption of digital payments. Customers becoming spokespeople for digital payments. Kind of like Demon, right? I mean, everyone's now saying, hey, if there's a delivery boy make a digital payment. If you're going to buy groceries, wearing a mask, make a digital payment. So everyone's telling everybody else that they should be making digital payments. Shopkeepers are asking customers to make digital payments. So I think in terms of customer acquisition, in many ways, the COVID environment's actually been even more powerful than demonetization. During demonetization, if I remember correctly, the biggest jump was actually in peer-to-peer payments, not in merchant payments. Whereas right now it's across the board, every type of category, every type of online offline interaction. People are trying to pay as much digitally as they can. So I think that's been helpful. The second is the fact that the regulators now across the board are realizing, all the financial regulators are realizing that the way to sort of really open up the market on the retail side is going to be by simplifying KYC and making it fully digital. So while I can't share details, proud working with a fintech group that's working on this project called KYC Setu. It is an interregulatory, fully digital KYC alternative. And I think the details will come out from Neeti in the next month or. But again, it'll be as fundamentally disruptive as UPI was, or interoperability in general was 4 years ago. So, and what's really cool about that is you're staring at a future if things work out the way we've designed for as technology guys, a reality where whether I was on Zerodha buying equities, whether I was making an offline payment on one of Manish's bosses, or paying for virtual games on Play Store, I'd be able to pay and I'd be able to do my KYC for any of the regulated payments with the exact same mechanism. That's super powerful. That would again be a first of its kind in the Indian landscape. And I think the third one, which opportunity slash problem statement today, is simplifying. I think lot of the regulatory obstacles beyond KYC that just make it hard for new to market customers to really enter, right? Just understanding a lot of the idiosyncrasies. So I think there's a lot of focus on digital education of products. Again, the mutual funds example, the government started a campaign a couple of years ago everywhere from Doordarshan and beyond saying mutual funds acha hai. But they kind of stopped short. They said, okay, acha hai, ab kya kare? And I think a lot of this is where the fintechs and the tech fins and the platforms are coming in, especially during COVID. I'm seeing a lot of very interesting and creative marketing, trying to get people to buy their first insurance policies or invest in equities or basically start sort of really breaking down into sachet size SIPs and investments. And I think that's going to be the future in India. The minute we get into what we call Bharat, past the first 150 to 1 million people, you really want to sachetize everything: investments, insurance, gold purchases, all of it. And I think all three of these are moving very, very fast. Super exciting times.
Okay, thanks, Amit. So you summed it up well. Super exciting time, a lot of innovations, a lot of education, new marketing, and you are moving ahead. So that's the first round, just to set the context. We have spent 1/3 of the time. There are many questions, but still we have 1 hour left to answer their questions and getting into the specifics. So now let's get into the specific. And the first question, I have the same question for both Google Pay and Phone Pay. We'll start with Sajid and then Samir. It's just a coincidence. Exactly 5 years back, of course, date is slightly different. If I'm not mistaken, that was 21st August 2015. At a Bangalore hotel, there's a conference called Leapfrog. Indus entrepreneurs held a conference where Nandan Nilekani made that famous statement, "We are staring at the, are we at a WhatsApp moment in Indian finance?" 21st August 2015. Are we at a WhatsApp moment? But it's strange though. WhatsApp never got the permission from Reserve Bank of India, even today, 5 years down the line. So which means Google Pay and Phone Pay, you had no competition. But now, as we talk, I think WhatsApp is almost about to get in there. It's just knocking at the door. But I think it's because the one issue which Reserve Bank of India had is the localization, data localization, which WhatsApp are not doing. but I think in June it informed the Supreme Court that it has gone for data localization, and it's about to get there ready, and it's getting. So now WhatsApp has about 400 million active user in India, and so where would you and with a localized data center, with a single platform, they are ready. They are getting ready, and they did it. They, if I may say, they invaded Brazil this way. Now, particularly Google Pay and Phone Pay, this is a direct attack on your turf. So I'll ask with Sajid, tell me. In fact, those who do not know, Google Pay was actually, you started it as TEZ, right? T-E-Z.
That is correct.
Yeah, you started it in September 2017. You started at TEZ, which is called a financial payment service. And then 1 year later, you registered it with Google Pay. And I think in the first 40 days, you get 30 million transactions and 8.5 million users. So it's an amazing speed that you were growing. But now with WhatsApp knocking at the door, and it's the same clientele. So, just I get a sense of WhatsApp, and of course Zio is there. So tell me, what's your, you spoke about innovation, you spoke about speed, you spoke about first 5 months, we have gone 5 years journey we have made. So tell us, Sajid, what's your plan?
Tamal, and if I may, with all respect, what does no competition mean exactly when you said in the beginning that PhonePe and Google Pay grew no competition? I mean, could you spend some time to help Samir and me understand what no competition meant? Because I can tell you, Samir, Steve, my team, they have we bled all colors to do whatever little we have today. So I want to make the point that anything, whatever little we've done, should not kind of be quoted with any of that word, right? Like, I mean, it is an incredibly complex, incredibly competitive environment. And I'm not just saying this for the record. You know this better than I do. Actually, I wasn't even around in India when Mr. Nilgiri made that speech. And I wasn't even around when we first launched in September 2017. But there is no more competitive sector and country, no more competitive sector than the sector we're in, no more competitive country than India. So I just want to make sure that we can level set. From there, we can talk about all the things I don't want to talk about, but that's perfectly fine, right?
No, fair enough. That's the way. That's the way to start to make it interesting. So you take it with you don't have to take it literally. So now the new competition. So would you like to talk about your strategy plan? Or what is there for the consumers? It's up to you. What is there for the consumers?
Look, I don't think Samir and I. So of course, I won't stop Samir. We'll talk about our competitive or strategies or anything. But look, here's the way we approach it.
Yeah, please.
With that, what do you want? What do you want payments to be? You want payments or fintech? I mean, even for Nikhil, right? I mean, and he will. More than any one of us, he will argue that, hold on, I'm like looking at certain segments, etc. But here's kind of at least the way that we are looking at it. I know I look at it every day. You want ubiquity. You want everybody, regardless of what their means are, no matter how small or how much, that they can take part. And to the word that Samir used, to some, they can buy entire cartons. To some, it'll be literally one matchstick, no problem. So be it. Yeah. So is there, what happens when more players enter the ecosystem? There is growth in the ecosystem. You saw it through an artificially sort of introduced way back in 2016. Then you saw the growth of the ecosystem through let's say something like an interoperable system like UPI, and now you see it through a crisis, a medical crisis that is now helping this ecosystem grow. Now you're pointing out that there is another player that will enter, a player with means, etc., so on and so forth. I mean, for us, it isn't really what does that player bring. More players coming in just brings growth in the ecosystem, and what we need to do doesn't change, right? I mean, it hasn't changed since the day we launched, and it won't change just because another 5, 7, 10, 20 players enter. And generally, what users are looking for is that we are reliable, that we are trustworthy, and that we're available in as many places as possible. And at its core, if you just think of these three things, look, that's where everything starts from. And I can tell you, we have many ways to go before I can actually tell you that, Tamal, you know what, we are knocking all three out of the park. And so we're literally, we are on day one, right? And that's the way we kind of think of this.
No, sure, Sajid. At the end of the day, all of you exist for the consumers. So
Yeah.
the more the players, the more the innovations, it's the consumers that get the benefit. So I'm trying to get I'm not saying that you will be decimated and nothing like that. I just want to tell, you guys tell our viewers and, how would they get the benefit? It will be more innovation, more competition, finer costs, so on and so forth. So PhonePe, those who do not know, I'm sure the tech audience, everybody knows that it's a digital payments arm of Flipkart. And I think you are betting big on O2O, that's offline to online. Samit, if I'm not mistaken, that's the mainstay of your business. You went live in August 2016. And again, if my information is correct, you're the first app which was built on UPI, right? So you are the first app. Yeah. So
we were the first. We were the first non-banking app. So
yeah,
I think
that's the. I mean the non-banking app. So tell me what is there. And I have seen one of your interviews. It recently said that you will go for an IPO in 2023. And you will become profitable by 2022. Now, it is COVID time. I think many of them are actually shelving their IPOs. You probably could advance your IPO because you are growing faster. So give us a sense of, as I said, my talking about WhatsApp coming to India, not as a threat to you, but as an opportunity for the consumers. So look at the other side of the coin.
Sorry, I couldn't help smiling. Partly because the way you sort of opened with Sajid. So as I look back at the journey, right, it's just been literally about 4 years. Later next week is the 4-year anniversary for UPI. We launched one day after the network went live. So sort of the way Sajid put it, the event you were referring to was 5 years ago. So I was still working at Flipkart. I hadn't left. We hadn't decided to get into payments. And honestly, at the time was starting to work on some data compression algos for whatever it's worth. So we had no clue we'd enter payments. Having said that, it's been absolutely surreal, but it's been a bruising journey. Let's not make any mistakes about it. Because the day we launched, there were also 20 odd banking apps and very reputable ones, ICICI and Axis, and we were starting with 0 users. And then Demon happened 4 months later, and the government became my first big named competitor, with the Prime Minister launching an app on New Year's Eve. And then SBI and HDFC, and then, of course, then Paytm and Google and everyone. And Amazon's gone super aggressive. I mean, Amazon has well over 100 million users on their apps today, and they've put digital payments, specifically UPI payments, on their homepage for the last 4 or 5 months. So I think the Indian consumer today is not devoid of choices. They have some very, very good choices, right? I think these are all very credible competitors. And as a 4-year-old startup, to be honest, we kind of take pride that we are in that consideration set at the top. So we're doing something right. And I think a lot of that has to do with maniacal customer focus. Any industry, any business, right? Everyone on this call, I think you focus on the customer, things work well. Second is, to your O2O point, I think this is one area where we started investing very aggressively in 2018, 2 years into the venture. We realized that whether it's UPI, whether it's Visa, MasterCard, Ram and I have spoken about this as well, unless payments acceptance becomes absolutely sort of universally accepted in every segment, transit, transport, grocery, retail, tolls, and what have you, we will not become a fully sort of digital economy. So I think so. We've now got about 12 million merchants that we've gone and stuck into operable QRs with, or gone and put out POS solutions for. And that will continue. I think our internal target is to sort of try and march to about 30 million retail SMEs. We're not looking at the B2B side at all. But I think 28 to 30 million is the right number. If you really want to penetrate India, the way the telecom sector's penetrated India, or a Levers or a P&G penetrated, I mean, that's true penetration, right? Otherwise, the internet sector on the e-commerce side has penetrated about 200 million odd people. So in that, when I look at WhatsApp coming in at this stage of the market, I think I've said this for the last 2 years straight, and I've said it on several times, several public forums. I would like them to enter sooner than later. And here's why. One, if they actually are as powerful change agent as everyone makes them out to be, then that means 300-400 million people will get over the hump of linking their bank account. They'll make their first peer-to-peer payment, and awesome. Because I become a beneficiary. Because if you try a category, then you'll try a bunch of players in the category typically. Payments, especially in an interoperable economy, is the first mover advantage is not as strong as you make it out to be. You have to really work with your use cases and features to really retain your customer. That's point number one. Second, I am not as bullish about people opening their purses for every type of application that they use, because that argument was used when we issued payment banking licenses for all the telecom operators. Hasn't played out the same way. Just because I pay my postpaid bill or I recharge with a particular company every month doesn't mean I'll bank with them. Similarly, and I think this is an important thing to think of. If I'm having casual chat conversations with somebody on WhatsApp, I have 5 other chat clients that I could use. I like WhatsApp because they promise me speed and security, right? Most people really became very, very comfortable with WhatsApp when they very publicly started talking about end-to-end encryption. But today the conversation's changed, and this is very specific to their group.
Yeah.
Would you start, I mean, if people are very comfortable transacting with a company just because they have a lot of usage, then I would contend that Instagram can disrupt payments. And hey, in our group, Myntra can disrupt payments. I don't think it's just a user base. Every user base is not the same. You build a different kind of trust for a different purpose with different platforms. Otherwise, in fact, I would also contend Google would not need to open a new application. They have so many like way of life applications in the ecosystem. So to solve payments on merit or financial services on merit, you have to actually be able to fulfill a certain set of criteria in people's minds. So I don't think it's a cakewalk. I don't think it's threatening. And I think obviously as an entrepreneur, I wouldn't allow myself. My mental conditioning is such that I'm fearless. So if I weren't,
Okay.
I would not play this game with this many people here.
Okay. Thanks, Amit. So you were saying you are waiting and you want WhatsApp to come faster than what all of us then. And you were saying, yeah, trust is the key. And the difference between you and Sajid, Google Pay is this. You named WhatsApp. Sajid didn't name it. He said, let competition come. Sajid didn't name WhatsApp.
They're a public company. I'm a startup.
Okay. Yeah, it's all fun. You just people want to know what's happening, because it's so much of competition, so many new players, so many new offerings. So everybody wants to know how one is differentiated. So let's talk to Zerodha. I think you're very interesting name when you started in 2010. And again, August is coming again and again in our conversation. Nandan Ninkan is famous comment WhatsApp on 21st August. I think Zerodha date of birth is 15th August. And it's a combination of zero and rodha is the Sanskrit word of barrier. So you wanted to break all the barriers with, right? That's the way to come in and all. And you have been growing phenomenally. You are actually a self-assessed unicorn because is it correct? I mean, it's not by valuation by getting new money, etc. But what's the stock issued to your people, the pricing at which they are being sold in the market, off market. That's what you have become a unicorn. So tell me, you are the largest broking firm in India. You have massive ambition of including going to US, and of course you started also a physical brick and mortar certain other things also you are wanted to start, if I'm not mistaken. So can you give us a sense? So one, it's not a complaint, but one observation I'm just taking in the right spirit is this: Zerodha is very good, but if you are a sophisticated trader, at times your system does not cooperate. That's the impression. Whatever little work I was doing, my homework before that. So that's it. So if you can address that also, I'm sure there'll be many in the audience who would like to know that if there's any issue there on that. And overall, what's your, how you plan to seize this opportunity in the COVID world, or as business standard say it's unlock BFSI 2.0, where beyond India also going. Give us a sense.
Sure, I'll take the hard question first and talk about downtime.
That's an observation, not a question.
Yeah,
I collected from your users.
Sure.
And
sure.
be a little louder, if you can. Yeah.
Can you hear me now?
Yes.
Okay, so downtime is a relative thing. What we strive as a company to do is, amongst our peer group, have the lowest amount of downtime possible. And I think we are successfully able to manage that. Everything technology at times can be disrupted by, physical fibers, a lot of dependencies that we cannot really control. Be it a HDFC bank or be it Amazon, everybody has downtime periodically. In our industry, amongst our peer group, we are very proud to say that over the years, we have worked on significant number of backups and redundancies. So we have the lowest amount of downtime amongst the other brokers in India. So that would be the answer to that question. I think by virtue of being the largest, it also gets noticed a lot more. So there might be many traditional brokers like large banks who have significantly larger downtime than us. But when we have downtime, because we are as responsive and because we are out there replying to queries on a real-time basis, I think it skyballs and more attention comes on it, even though we have lesser downtime than everybody else. In terms of the other question you asked, I think, our anniversary is actually tonight or tomorrow, 15th of August. We complete 10 years tomorrow. I think so much in business is a factor of which industry you enter at what point of that industry's cycle. We got really lucky to have entered in 2009, 2010, just after the financial crisis. And we got a big first mover advantage by virtue of being in the right place at the right time. I'm sure if we had to replicate the same thing today, it would be a lot harder with so much more interest in this industry and so many more people trying to disrupt this industry. So we are very hopeful, Tamal, and I think we are kind of working on many different projects. We are trying to grow outside the country.
Manish, a bit louder. Audience, I'm getting this thing a bit louder if you can.
One second.
Yeah, I think this is a better sound. Yeah.
Yeah, so we're trying to grow.
That's fine. Yeah.
Sure.
Yeah.
So we're trying to grow both laterally and into other geographies as well. Right now, we have transitioned into asset management and we're building really interesting products there. We've started a sister company called True Beacon, which is kind of focused on asset management for the ultra HNIs. On the retail side, we're coming out with something as well. But our core competency and our core domain continues to remain how to make the end users experience a little bit better and develop more tools which will make investing easy, and we can grow the market and get new people into the market. Because the problem, like Sajid was mentioning earlier, even in our industry, is not one broker cannibalizing another, but the industry has to grow in scale because access to stock markets, as I said, is very, very underpenetrated in India.
Manish, an unrelated question, meaning nothing to do with technology, but tell me the last few months, this irrational exuberance, if I may say so. Every retailer is now getting into stock market. Is it like because they have nothing else to do, or all the other avenues for gambling got shut because of the social distancing, or like I don't have any money, so if I can make little money, what is the psychology behind it? Can you tell us? And can you give us a sense like pre-COVID and now, what's the growth?
Sure,
In a
sure.
quick way.
So I would say the average number of accounts we are opening in a month have grown by consistently month over month by over 100% if I had to compare it to the base average of 6 months pre-COVID. Many factors why so many people are coming into the market, but I think more so than ever, India as an asset class, we have always loved real estate. I think a middle class family traditionally put most of their income and their earnings towards their housing EMI or the investment in the second home that they might have bought. I think real estate has underperformed over the last 5 to 10 years, and it does not provide the kind of liquidity that an investor might seek during a time of crisis like the pandemic. Outside of this, I think FD rates have dropped off a cliff, and traditional people who invested in FDs are now looking upon the stock markets as a means to beat inflation as well.
Okay, thanks, man. Let's talk. I mean, Sajid, you said when I said techie, you didn't take offense, but you said, "Look, I'm not a techie. I'm just an executive and all." But there's a one gentleman who is
No, I didn't say I'm executive. I just said like, I know things to do on the business side. I'm no executive.
Yeah. Sajid, no. I said you said you are not a techie, but here among us there is one person who has the most interesting background. Any guess who is this gentleman? Who is most soberly dressed today? Manish Patel, Msme, white dress, white long sleeve, this thing and all. Manish is the founder of Msme. He was homeschooled in South Africa, and with the jokers all around and all, because of dad used to run a circus like joker and trapeze artist around. And then he did his medical science. He studied in Topiola National Medical College, wanted to be a doctor. So see, from a trapeze, being with the trapeze artists and jokers, he just jumped into a medical college, he did this. And later, hold your breath, he was running Santa Wines and Beer, an alcohol shop in Mumbai. So from circus to medical science and to alcohol, wines and beer. And then he got into Msme, founding Msme. It was a low cost and reliable POS terminal. And you are the largest developer of point of sales terminals, if I'm not mistaken. It's some millions of units you are doing. So now tell me, you have innovated the POS space, Manish, but now we are getting into a situation where people are saying that because of this, the merchant discount rate, and Reserve Bank of India said how much you can pay, that MDR is an issue, etc., etc. Now those banks which are actually seeing POS as a sort of business stream, they started saying, look, no more POS does not make any more sense because of the contactless payment system which is growing. So give us a sense. Don't get excited like Sajid. I'm not a doomsayer that your business is going down the drain. Nothing like that. Just want to understand what's happening in that POS space.
So the POS space has evolved over the past 3 decades significantly, right? I mean, when you talk about a point of acceptance,
and one small addition, because I have heard you saying that you are targeting the small kiranas and on in a big way, but there is one player, and Sajid, I am naming the player. It's Geo, which is also aiming at the same space, the kiranas and all. So both the structurally and also as a business model, both are now being, I think it's more challenges than opportunities, or probably I'm wrong. You correct me.
Look, I mean, I personally look at it as an opportunity.
Sure.
Because what Mswipe wants to be is really the merchant's best friend, right? In fact, the more the confusion around different ways to pay, right? I mean, today when you talk about a consumer, the consumer's got a card, he's got contactless, he's got phone, he's got UPI, right? I mean, there are just too many ways for a consumer to pay. As far as the merchant's concerned, no one's really bothered about the merchant, right? The merchant at the end of the day wants to deliver goods or services and get paid. And life was super simple before all of this digital journey, right? I mean, he had cash, he could count cash and go home. And today, if you look at it, the merchant has to reconcile cash, Google Pay, Amazon Pay, Phone Pay, cards, and 50 other things, right? The way we look at it, it's massive opportunity for us. We just want to help merchants have one account to be able to accept all kinds of payments. Help them, get all of that money, into their account with a single point of support and reconciliation. Which starts becoming very difficult to do. As there is massive proliferation of different ways in which customers want to pay. On the technology side, we've been part of that journey, right? I mean, when we started, and in fact, August seems to be the favorite month for all of this. Thanks for pointing it out, because Mswipe went live on 16th August 2012, right? I mean,
yes.
We turned on our first POS terminal, at my store, on 16th August 2012, and India was magstripe only at that point in time, right? That was the only thing. And if you look at it in 8 years, here's what's happened, right? Consumers have moved away from magstripe to EMV chip and PIN. Cards, contactless cards are now starting to really grow fast. You have phone-based payments, you have app-based payments. When I talk about phone-based, Google Pay, you can actually tap your phone, with a tokenized card. That's about to happen. Samsung's done this, where you can actually pay with your phone and a tokenized card. You can pay with an app, by scanning a QR. But there's always going to be evolution. What we're really focused on is, like I mentioned, how do we make sure that we help our merchants get paid, right? No matter what the consumer throws at them. And
Manish, yeah. Can you just throw some light, because we always get confused and get very contradictory views on that MDR, merchant discount rate?
Sure. Look, merchant discount rate, is essentially a fee that
Yes.
that merchants have to pay to accept payments, right?
Yes.
However, if you look at it today, there are zero MDR payments, right? I mean, UPI, for example, is zero MDR. The MDR on debit card payments is extremely low, right? It's 0.4%, and it's just credit cards that have a higher MDR, and there is a very clear value proposition as to why the merchant even accepts that, right? I mean, at the end of the day, the merchant is able to accept a payment from a consumer, more than what the consumer actually has, in his bank account, right? So it's ultimately credit that the industry or the ecosystem is paying for.
No.
However, while we've competed in this industry, and as we've seen the onslaught of zero MDR kind of
Yes.
payment ecosystems,
Yes.
I'm pretty proud that Mswipe's innovated, and we've just launched our POS that we call the bank box, actually just a few days ago, where merchants now don't have to pay MDR on any kind of payment, right? Whether it's credit cards, debit cards, UPI was always free.
Okay.
But yeah, I mean, that's where the innovation is coming from. Right? At the end of the day, if I told you just a few months ago that on credit cards you didn't have to pay, a merchant didn't have to pay MDR, you'd say, wow, that's not possible. But well, we made it possible, and this industry is going to continue to change, and unless you're at the forefront of technology, understanding, how all of the different moving pieces come together, and are able to deliver seamless solutions.
Yeah, thanks, Manish. Ram, let's shift. You started the discussion the first round, so let me get back. I think sometime back, one Reserve Bank of India announcement which got a lot of kudos from every quarter is this: one can make shoppers can purchase. I think up to 2,000 rupees using their contactless card, only using PIN and all. So that's the thing. It's a big step, but it's a very small step at the same time. I mean, as a policy, it's a big step, but nobody is happy with the kind of limit for the contactless card that Indian regulator has done. I think nowhere in the world um, where you see that, but in India now, e-commerce is available in 95% of the PIN codes across India, and so this is the kind of opportunity. And nowhere in the world, apparently, this kind of so limited usage of contactless card and all. So tell me, Ram, it's a tough time. We were a sort of, till recently, I'm just saying, till NPCI came very aggressive and we have got the Indian debit card. The MNCs were playing a very big role in the entire card industry in India. But things have changed. Things have changed dramatically. I know that if a bank used to get MNC or that's matter for you, you are dictating terms. But now that's no more because of competition. That's no more the case and all. So, but India is such a large market. So tell me, what's the? Of course, COVID is the context now. But overall, what is the game plan for India, for a market like India?
Thanks.
You're on mute. Yeah.
Can you hear me now? Thanks,
Yeah.
Tamal. I think
Talk a bit louder. Yeah.
There were about 5 questions in all, so let me try and sort of get to them in no particular order. Firstly, on the contactless situation, absolutely. I think contactless is the way the world is moving. We just announced contactless with the Japan Metro, and some of you may have read about it. The London Metro does 1 billion contactless rides a month by just tapping your sort of Visa card and entering the turnstile opens. There's no need for those old cards that they had. And then more so in COVID era, I think contactless, whether it's NFC, and I think Manish spoke about, your mobile phone sort of having a tokenized card inside it and sort of using a mobile phone as a payment device, right? By the way, Manish knows this, we're also working on mobile phone as an acceptance device, where you call it tap to phone, where your Android phone becomes an acceptance device as well. So you don't need a POS terminal as well. So contactless is proliferating in the country. I'm excited by use cases like transit, where contactless is an obvious use case, like restaurants, like low ticket, etc. And by the way, Tamal, about 86% of transactions on debit are less than 2,000. So I'm not personally that sort of, it's not an inhibiting factor. Yeah, obviously if the limit was higher, it's higher. But now the RBI has also allowed tap and pin above 2,000 rupees. So that's one part of it. On the e-commerce side, which was the second question, India has two-factor authentication, as you know. But again, the RBI has allowed network solutions, which is a solution by Visa or by NPCI, whoever it is. Networks can create solutions working with the merchants where up to 2,000 rupees second factor is not required. And network can stand in and do the authentication on behalf of the bank, right? We have just launched a made in India, made for India product called Visa SafeClick. I know Samir uses it a lot for PhonePe. So I think the point I'm making is we have to get the best of the globe to India, but that is necessary but not sufficient, because you also have to make in India for India. I think you need to sort of do both those things. And the third part of your question, we were never demanding or dictating terms. As a B2B player, I'd be sort of dead in the water whether it was in the developed markets or developing markets. If I dictate terms to for example, my clients who are sort of Manish, Sajid, and Samir, I'm suitably respectful and deferential towards all of them. And lastly, I think form factors change, and we have to keep pace with form factors. India is one of the few countries where contactless is growing, QR is growing. There's a whole bunch of form factors which is growing, and it's sort of it's one of those let 1,000 flowers bloom moment.
Well, no, Ram, I think I may have asked you 5 questions, but I could not actually probably convey the right way, and you have dragged me to this and all. What I wanted to, in one sentence, what I wanted to say, India, and not only in India, in most of the emerging markets now, smartphone replacing the POS machines. So the world of card is now becoming much, much smaller. So there, what do you do a card networks? I mean, how do you remain relevant and grow? That's what I want to know, because now I'm carrying my everything in my mobile. So nobody is, that's the preferred use. As card is no longer a preferred use. Not only in India, in most of the emerging markets.
That's
So
absolutely right.
card issuers like you, how do you remain relevant and grow and thrive?
So the first thing to say is that Visa is no longer just a card network, right? We like to think of ourselves as a network of networks. And the card was a form factor. Of course, in today's day of plastic, nobody likes plastic, right? Plastic is a bad word. It's not environmentally friendly in any case. So mobile, whether it's your sort of web, whether it's mobile, whether it's anything else, we are a network and will facilitate all networks of money movement or data movement, right? And I think there are plenty of examples even in India where we're sort of moving to that, where you fund it from your account to get it to somebody else. You fund it from Manish to give it to Nikhil, which is person-to-person payments, or government to business payments. We are sort of moving money and creating standards and security and interoperability. That's what we do as a network, right? And the card was a form factor. You're absolutely right. It may not be a form factor. I think the foundational technology we are punting on is actually tokenization, where you can tokenize credentials and put it on your mobile phone. IoT, there are going to be 20 billion IoT devices. So we're putting it on sort of the Internet of Things. And so think of all of these devices being payment instruments and sort of speaking to each other. I think that's the sort of vision of a network of networks which you are getting towards.
Thanks, Ram. That's what I was looking for, the answer. You have given me the answer. So Rajesh, tell me, it doesn't really matter to your company whether it's a card or no card, or because you're a solution provider. So that way you are medium agnostic. So tell me, in this new COVID world, as one of you said that in 5 months we took a stride for the last 5, which would have taken 5 years. So when you are in touch with where the companies where you are providing solutions,
yes.
Do you also get the same feeling that everybody is in a hurry to grab the opportunities?
Yeah, absolutely. I think there has been an absolute turbocharging of digital projects, so to say. That what's really happened is that some of the projects that were held for, let's say, 5 months later or 6 months later in real time and calendar terms has really been pulled forward and said that this has to happen in 15 days, 10 days. So the timelines have really been shrunk because the need for a customer outreach is really very important in these times. What's happened is that the whole concept of a branch footfall was anyway changing with the advent of digital payments. But a lot of the business processes for, let's say, onboarding for customers and the operations for corporate banking or SME banking was still having a sort of a need for a branch footfall. And that has suddenly changed. So there is a huge demand for solutions in the area of digital customer onboarding, including video KYC. There is a demand for regulatory technology solutions like anti-money laundering checks to really become more real time in terms of giving a reply back. For example, if you had a need to onboard a customer in 3 minutes, then you've got to make sure that all the regulatory tick boxes are ticked to make sure that you have taken care of all the regulatory requirements, because there is no easing of regulatory requirements as such as of today. The third concept has come where the change in the digital channels, the preference, has also been there immensely in the COVID times. So omni-channel is really taking on board. And I think now you will find customers moving not just within apps itself, which has been the case today, but also then moving to voice commerce. And we have then seen solutions around Alexa banking and Google Assistant banking and other various forms. I think within the next few years, or at least in a year's time, you'll see the advent of 5G and IoT. The marriage of these two will really bring a revolution in the way banking is done for businesses, because every device that can talk to each other and with the capability, like Ram said, in terms of a global network, will really bring forth the opportunity for businesses to interact as much as, let's say, someone is today using UPI and Visa for, let's say, payment across apps. So that's something which is a great opportunity for us as a company, where we are looking to revive a lot of opportunities within the digital space for the front end technologies like onboarding and customer facing services. Chatbots is also becoming popular. The second part is in the banking operations itself. The use of artificial intelligence has become more important as of today, because the 4-eye view of approving a lot of the processes is slowly being done away with. And this would bring the need for some of the decisions that are the so-called rule by book or a standard operating procedures to really get done by either a artificial intelligence system that's got a decision tree, or to look at a form where you have the tasks of replication being done by robotic process automation. So those are really the technologies that are coming forth in banks per se. I think the back office side, on the regulatory side, is the part of anti-fraud is coming to the forefront. The need for having the prevention of frauds, the detection of frauds, and the capability to manage these has become very important for not just digital channels, but also other forms.
Thanks, Rajesh. Yeah, thank you, Rajesh. So we have actually many more questions. I too had many questions, but let's do that. Let's combine my question and the questions come here, because many of them are similar. So we have about 15 minutes allotted time, and we could exceed by a few minutes here and there. So it's a very important question. I wanted to know that any innovations keeping rural India's needs in mind. I also wanted to know, because all these things are actually, how many of us, I mean, in urban, in metros we use, but what happened in the rural India? PMJDO is a great success. 40 crore plus accounts have been opened, and there the DBT, the first point is cashless, but after that it's become only cash. So the challenges are very different. Even the mobile language. You need to have localized language and all. So maybe Sajid, you want to take this? How do you first, and then somebody else also can add? It's a huge the clientele, the markets in rural India. Users are many more. What are the plans for rural India?
Yeah, no, I think Tamal, you raised very important points. Some of, I think, the things that we need to do as an industry have been touched upon. The part about sachet, the part about I feel trust and reliability is very critical for them. I would say the way that we also think about this are these kind of 3 V's as well, if you will. Because when we think of rural India, we think of the next billion users, we think of the fact that these users really, I think, gravitate to video. They use voice a lot, because literacy rates could be challenged, and also vernacular or sort of language, right? Like the local language. And I think if we think of these 3 things and find ways in which we are serving these users in these segments across, like, hey, how can we make voice search even better, right? Like, I mean, what can we do to sort of enable them that video is something that actually is used more and more just in terms of usage, etc. All of that is going up in rural areas. I mean, as we all know, data cost in India is the cheapest in the world now. So, is there ways that we can surface more video results, and how can we make that more useful? And then to be able to do this in local languages, and there are many of them across India that literally tens of millions of people speak in, which today I think there's a lot of work that needs to be done in that area, and we're focused on. So I think if we take these lens of voice, video, vernacular, I think we'd be in a good place, and that's the way we kind of approach that.
Thanks, Sajid. Anybody else want? Yeah, anybody wants to add?
Very important. Trust and reliability is also very important.
Trust. Yeah, Samir. Yeah, Samir.
I'll just quickly add one to that. I think infrastructural and regulatory enablement were gaps, which for people to be able to make payments and get into that entire sort of financial services inclusion or financial inclusion journey. Feature phones, the iOS phones, the lower end devices, those were not or are not part of the ecosystem today. I think 2 key developments in the last 6 months, NPCI has formally announced. RBI had approved payments below 5,000, you can do the 2FA without the encryption starting at the application layer. So there's some laxity there, or relaxation there. So there are now UPI solutions. There are, I think, a lot of wallets starting to, or PPI starting to build solutions for feature phones. For wallets to work, life was always easy, but then you needed to load them. So you still have that chicken neck problem. So with UPI payments becoming enabled for feature phones and KaiOS, I think that'll really open up the market. Uh, Both solutions should be live next quarter. We are working a lot on those. Second one, as I mentioned, KYC Setu, one of the key things that we promised the government in the entire core design was that KYC for any financial sector, for buying life insurance, for buying your first SIP, all of that should work in rural. So that is a key focus. The entire architecture, all the way up to the application layer, is designed for rural and tier 2 and tier 3 and beyond. So I think that has been one really cool thing about COVID is we've, I think at an industry level, along with government and the regulators, everyone's suddenly joined public-private collaboration task force, trying to see how to really unlock the market. I think you'll see the best of that in 2021.
Thanks. Manish, you wanted to add. So tell us more. In fact, there's one question which already, Samir, you touched upon. One person, I don't know whether it's a lady or a gentleman, said that without smartphone, can I get an entry into the digital world?
Yes.
Which is a very, very relevant question. So Manish, you wanted to say, maybe you can answer that also.
I just wanted to add, my point of view here is that, when you talk about rural India and you talk about payments, right? First, let's understand one thing is, what's the problem that we are trying to solve by saying our digital payment karo, right? I mean, you imagine this, you're in a small village, and if you've actually been to small villages in India, you have, a few shopkeepers, and then you have people they know by name, who are their customers, and transactions between them, are largely driven by trust, and following that there is a payment, right? And you're not really solving a problem by saying you make your transaction digital. I think fundamentally what needs to be done is how do you deliver better credit, right? And unless you start looking at delivering credit and various other similar financial services digitally into rural India, payments by itself I don't think is solving a big problem.
Okay.
So that's
Nikhil. Sorry. Yeah, please carry on.
As things like credit on UPI, etc., start becoming reality, that is when you will see massive penetration, into the hinterland. That's my view.
Okay, Nikhil, you wanted to add something? Yeah.
Nothing specific as such, but I think the rural landscape in India is largely, it's such a large landscape and has such a big ecosystem. But I think they lack the kind of education that many people in cities receive. I think educating people in the rural environment will go a long way towards bringing them onto the digital payment platform, but in turn onto the financial markets and include them in the larger.
Nikhil, that is the question. In fact, since you raised it, why don't you answer and somebody else? You are saying education is important, but how do you educate them? Not only rural, even say semi-urban, even in urban. This digitalization and then hand-holding them into the digital world and creating trust. How do you do this? A little bit of sound, just raise the sound. Yeah.
Sure. Well, I think this has to start at grassroots levels. By grassroots, I mean like in the formal education system. Our system of pedagogy is archaic in many ways. I think our education system, notwithstanding the recent changes that have happened, are much like the education systems of, the Industrial Revolution, wherein people were taught how to work in a factory assembly line. I think with the advent of smartphones and accessibility in rural areas, a lot can be changed quickly. But I think formal education landscape and, it should start in places like government schools, middle schools, where education is more pragmatic than theoretical. I think changes have to happen from that level.
Okay, Rajesh, you wanted to add? You raised your hand, yeah?
Yes, I agree with what Nikhil mentioned. And just to elaborate on that, I think digital
Quickly,
literacy is a concept that I was talking about. And digital literacy has to start with educating customers on what are the pitfalls of, let's say, not adopting the proper security when it comes to payments, be it rural or semi-urban or urban. And I think a lot of that falls in the hand of banks when they launch these products, digital products. The regulator themselves bringing out regulations is one thing, but also communicating that and then bringing out the aspects of it which could be negative to sort of bring that digital literacy is something that is important. And in some ways, banks are today reaching out to customers on emails, etc. But when it comes to rural India, I think it's necessary for the government also to step in to sort of bring forth literacy programs on the digital paradigm.
yeah, one question. This is specifically addressed to Samir. Okay. This question says that, Samir, your question. If payments need to be contextual and deeply embedded in transactional flow, why don't we see Phone Pay as seamlessly integrated with Flipkart as Amazon Pay with Amazon?
I think
Whatever that means, it's not
sure.
my question.
I get the question. We get this often. I think it goes to origin and ambition, two things. Amazon started as Amazon as a wallet service, which is a prepaid container. And I think they were solving for checkout on a shopping experience. So they said, load your wallet so that you don't have to check out, you don't have to do a payment interaction every time you check out. The way we started out, it so happens that we are fully Flipkart owned and I am from Flipkart, but we were very, very clear that we were building a standalone destination and brand. And Flipkart is a very good use case, but it isn't the use case. So for us, we service many, many merchants. Amazon's was predominantly, I think they're breaking out now a little more, but they were predominantly focused on using Amazon Pay to make Amazon checkout easier. So I think started out with different ambitions, started out at different places. Also, PhonePe was building a different company, product and brand before we merged back into Flipkart. It wasn't a homegrown incubation or a business unit.
Okay. One question is a very technical question. I don't know who wants to take it. Maybe Rajesh, maybe Ram. I'm just reading out and anybody just raise your hand. What will be the impact of account aggregators and Ocean open credit enablement network infrastructure on fintech and banking over the next few years?
I can take it.
Yeah, please. Please, Ram. Yeah. It's over to Ram. Yeah.
Yeah. So there are sort of two things there of account aggregators and then OCEN. And we talk about account aggregators first, right? Account aggregators, it's called open banking. It started as open banking in the UK. It's called PSD2 in most of Europe, which is Payment System Directive 2. Effectively, what it says is banks can no longer be, or any financial institution can no longer, quote unquote, hoard the data. They have to share it with other financial institution providers at customer request and with customer consent. That's the whole theory. So if I sort of theoretically, if Samir Nigam starts lending tomorrow and I go to him and say, hey, I want a loan, and Samir asks for my XYZ bank savings account because I have authorized him to do so, XYZ bank has no option but to give that data to Samir, right? Why would the bank give it? Because the bank will also get it. This is how credit bureaus started, 15, 20 years ago. Account aggregators in the Indian context are entities which the RBI has set up where the data will flow through them, but the data is anonymized. In other words, they cannot see the data which flows through them. They're just a pipe which uses APIs to pull data from somebody and give data to somebody. Now, it may sound all very simple, but it suddenly democratizes the entire consumer finance process because there is no information arbitrage, which a large bank has. A small bank or a lender or a fintech has exactly the same information about you as what your primary bank or a large bank has. And that suddenly breaks down so many barriers and makes lending more democratized, right? Now, let's talk about OCEN. OCEN is Open Credit Enablement Network, which is a system or a sort of series of putting all these consent layer and account aggregator layer and a very series of things to make lending primarily directed to the MSME easier. So you could be a technology service provider, you could be a financial provider, you could be a sort of balance sheet provider, but it is a sort of system which lends all this. And by the way, it's very, very unique and very, very innovative in the Indian context. And if I were to hazard a guess, there will be plenty of fintechs or tech fins who sort of hitch their wagon to the Open framework in the next 36 months period of time. Again,
Thanks, Ram.
Exciting.
Thanks, Ram. We have many questions, but I'm only taking one more question from the audience, and then we'll go back. We'll have our last round, which is 1 minute each. Is that okay with you? You can exceed for 5 minutes. Okay. This is a very critical question. It's about cyber crime. There's a, as COVID is giving you a lot of opportunities to expand as far as digital is concerned, but in the past few months, we are also seeing exponential rise in cyber crime. So as we expand the digital world and embrace more and more customers into it, how do we, how is there any mantra anyone wants to offer? How do you actually contain cybercrime? Is it through machine learning, app warnings, notifications, SMS? How do you do this? It's very embarrassing to admit that I myself have become a victim of a fraud. So how do you contain cyber fraud? Any ideas for the consumers? Any advice anybody wants to give?
Yeah.
Yeah.
I think
Rajesh,
from a perspective
Rajesh, yeah.
Yes. So from a cybercrime perspective, digital literacy, of course, is one of the most important things there. But I think what is important is customers are aware of the fact of how phishing, smishing, and various other modes in which you can get tricked into or pulled into an opportunity to sort of click a link and provide more details, how those come by, and that how you have to avoid those. That's very important. In terms of most of the cybercrime, I think 60% or 70% of the cybercrime resolution can happen with the customer being way more aware. Importantly, also the legal framework in India has got a lot more simpler with the concept of a zero FIR being launched, that you can get to any police station. You don't need to specifically go somewhere, and then they can get directed to the cybercrime for lodging such complaints. So that's also an important aspect that has been sort of resolved in many ways. But importantly, I think for the systems that are there, the concept of two-factor authentication is a very important one. 2FA is something that will resolve in some ways the cybercrime aspect of saying that when there is a suspicious transaction, and that's where I alluded to the use of anti-fraud systems for all channels at banks, and there you can then invoke a two-factor authentication where there is a suspicion of fraud. So those are three critical pillars, I would say, of the customer being aware of not to get enticed into some opportunity of clicking a link and providing details, knowing fully well that the bank will never ask you for your password or critical information. The second point is to really know when this happens, how to resolve it, because it's very stressful to really go through a cyber crime. I personally haven't been there, but I have been at a point where we're looking at various clients who want resolutions around these aspects. And then the third part is the important aspect of banks deploying systems that can contextually provide two-factor authentication or more as required.
Thanks, Rajesh. Thanks. So we have almost come to the end. So I have only two questions. We don't need to have a round, but if you can just give a 30-second answer each of it. We'll start with Rajesh only. All of you are talking about the speed at which the digital world is expanding, the speed at which more and more consumers are coming in, and the speed at which competition is intensifying. But you are saying you are not afraid of competition, it's more the merrier, because at the end of the day, the consumers get benefit. So Rajesh, can you give one innovation that you can see a crystal ball glazing in the next few years? One thing that will change something new will change the world as far as the consumers are concerned. Dennis.
I think the one change will be the advent of 5G and how IoT comes in in a different way to be used by consumers, where a single chip can be then used to authenticate payments or various other processes. The whole concept of, again, digital identity will be again an important. So those will be two key areas where there will be adoption for the
Manish.
consumers.
Yeah, thanks, Manish.
I think contextual payments. What I mean by that is there is going to be a way of frictionless payments where if I walk into a shop, I don't need a payment instrument. I am the payment instrument. The shop will be able to identify me, and will be able to automatically debit my preferred mode of payment, whether it's my bank account or my credit account. And I've seen this at work, and it's just very, very cool.
Thank you. Cool. Nikhil, any cool idea?
Well, I would say accessibility and financial literacy in rural India will change the landscape considerably. In terms of diversification, most of India still doesn't have enough number of asset classes in their portfolio. And I think these two factors will change that and increase the landscape manifold.
Ram?
I think ubiquity and interoperability, I think those are the two things which, simple as it sounds, that's the sort of holy grail which all of us have to aspire for. And this can change because if we can make digital payments as easy as exchanging a 100 rupee note, that is sort of nirvana in payments.
Samir?
I think digital payments getting to about 500 million people in the next few years, because I think at that tipping point, it'll get to the remaining 500 million in less than 3 years. Just network effects. So I think we need to get payments there, because I believe whether it's lending, which requires data, or whether it's asset classes, which requires, again, having trust with platforms, all of that will follow. So I think from just a very macro perspective, I think we need to really get everyone to participate in the digital payments ecosystem as much as possible. It unleashes a tsunami of positive activity from there.
Thanks. Sajid, not macro, I'm looking for micro. Yes, that's a wish, everybody should come. But what is the hook? Sajid, can you tell us one big innovation you expect in this space next few years?
So, I feel like the coolest things or the most innovative things are the most basic things and the hardest to do. So, if you can be trustworthy, if you can be reliable, and if you can be everywhere for everyone, then, all these other things of innovation, coolness, etc., everything happens. So that's what I'd say. Be safe, be reliable, be everywhere for everyone.
Thanks, Ajit. We have come to the end. Thanks for your patience. Just the last round. Again, 30 seconds, if not even shorter. We started our individual round with this Nandan Nilekani comment, WhatsApp moment in 2015. I'm ending it with the Bill Gates, Microsoft. In the 90s, he made that banking will remain, but bankers probably would become dinosaurs. So I'm not asking you the same question that will the bankers be dinosaurs? In India, we are saying no. I mean, it's not. What Aditya Puri has once said that, look, you can give a chef a fantastic kitchen with all kind of things, the weighing machine and best of spices and how to make a chicken. But at the end of the day, he needs the chicken to cook. Bankers have the chicken, that's the customers. So the fintech and techfin can ride on banking platform, but on their own, they will not be able to survive without the bank. So I'm not getting into that debate, but I'm asking each of you, and starting with Sajid, just one line thing. Do you think it's the time Indian regulator should be, okay with the idea to allow digital-only banks in India? We have seen overseas, I'm not getting into dropping names and etc. But is it the time for India, when with so much of digital push, that digital-only bank we must see? Sajid, starting with you.
No, thank you, Dhamal. It's not for me to tell the regulator how or what to do.
No, your wish. You are not dictating regulator. It's your wish. Should there be? No, you give it a pass?
Yeah, I'll have to pass. Yeah.
Okay. Samir? Does India deserve or need a digital-only bank? Is the time right for it?
I absolutely think so. In fact, I don't understand if someone has a universal banking license, why they can't be digital only anyway. It's just saying I'm branchless. So absolutely, I'm also going to, in 5 seconds, interpret and answer your question slightly differently. I think you're also asking whether non-conventional banking players should be allowed to operate only digitally. And I think that is also very important. Fintechs, techfins, whatever you call them, should be able to
I
pay.
meant that because
Yes.
existing banks converting themselves into digital, that's given. But only digital only bank new players. That's what I meant.
License on tap.
Okay, license on tap. Manish?
I echo what Samir said. It's time that we embrace this new real world, and it is digital, right? I mean, at the end of the day, if we can't do that, then we may say we may have the best payment systems in the world, but if we don't have a forward-thinking regulation to match, then it's just a dampener.
Okay, Rajesh?
Yeah, I think there's space for in banking for almost anyone, and I think licensing is a thing that needs to be open. But I also think that currently the banks in India, especially the ones that were seen to be lethargic and sort of conventional in the way of technology, have really moved forward. So I know of at least some banks that were 3% digital are now about 54% digital transactions run. So in that way, I don't think there is a need for a digital-only bank as a necessity. Banks, the ecosystem as such, I think is something which regulations need to adapt towards digital to make sure that concept of digital expands based on customer choice
Okay,
rather than
Nikhil.
just regulation.
Thank you. Nikhil?
I completely agree with Samir and Manish. The current licenses of a small finance bank or a payments bank do not make much sense to most fintech players. So I completely second what they said, and I think we should have something like that, a digital.
Okay. Ram? Last word is yours.
Yeah, so I think, well, neobanks have already started in India, haven't they, Tamal? So where the banks will be just balance sheet providers or sort of license providers, where the front end will be done by somebody, there's a whole slew of neobanks. At some point of time, they'll morph into licenses. But again, I would tread with caution. And you mentioned there are digital banks in some of the other countries, but I think Samir made the point, or somebody
where you can raise money, deposits from Facebook. That's I'm talking about that kind of bank.
Yeah, but remember that in India, I mean, I'm just conceptually what I want to end with say is two things. One, it's very easy to give money digitally in India, but receiving money and for the consumer to give her trust to you, it's a whole other kettle of fish.
Okay. Yeah. Yeah, so I think it's a pretty, we have exceeded the time by 10 minutes, 11 minutes to be more precise. So thank you, Sajid, Samir, Manish, Nikhil, Ram and Rajesh. We have a pretty animated discussion. So what are the key takeaways? Very interesting thing. All of you actually contributed to it, that it's a huge opportunities. Yes, of course, there are challenges, but there are more opportunities than challenges. Challenges in the form of competition, but none of you is scared of competition. You are actually waiting with open arms to allow competition to come, because you think that will only help you to better your services, to be more innovative. All you said is this: we need more education. We need to make people understand what's the digital world all about. We need to also go beyond the territory of urban India and get into rural and handhold them and embrace them into the digital world. And the most important thing, one of you said this yes, demonetization was the first kick that gave to the digital world. But the past few months in the COVID-19, since March, what you have seen, in the past 5 months, actually you have advanced by 5 years. So I'm sure with more players knocking at the door, with more products on your table, it will be even bigger digital world for India, and it will be exciting. So thank you all. Stay safe. And this is the second round of Business Standard 6-day, 9-session Unlock Bfsi 2.0 event, which will end on 27th with Reserve Bank of India Governor giving his views. In between, we will hear bankers, small finance banks, insurance companies, mutual funds, and all, the biggest players and the brightest minds. So stay tuned. Thank you. Very good evening. Stay safe.
Thank you.
Thank you.
Thank you, everyone.
As we come to the end of today's session, a big thanks to our esteemed speakers again who are some of the pioneers of fintech in India. Thank you, Tamal. Thank you, Intrasoft Tech, our partner today. And thank you to our audience for starting the Independence Day weekend with us. Coincidentally, the leaps in fintech over the last few years have given so much freedom and convenience to consumers and institutions alike. Our next session on August 19th is about the opportunities for small finance banks. A preview on your screens now. Time to say goodbye. For those watching us in India, a happy Independence Day in advance. Have a great weekend and see you again. Thanks.
Thank you.
He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard.